What is venture capital? Introduction. Hi there, and welcome to the channel. If you've ever wondered how startups get the funding they need to grow and succeed, you're in the right place. Today, we're diving into the world of venture capital, what it is, how it works, and why it's crucial for many emerging businesses. Let's explore the essentials of venture capital and its impact on the entrepreneurial landscape. 1. Understanding venture capital. Venture capital, VC, is a type of private equity funding provided to startups and early-stage companies with high growth potential. Unlike traditional loans, venture capital involves investors providing capital in exchange for equity, ownership stakes, in the company. This funding helps startups scale their operations, develop new products, and enter new markets. 2. How venture capital works. Venture capital typically works through venture capital firms or individual investors who pool their resources to invest in promising startups. These investors seek high returns on their investment, often looking for companies that can offer substantial growth and profitability. In exchange for their investment, venture capitalists usually take an active role in the company, offering guidance, expertise, and connections to help the business succeed. 3. Stages of venture capital investment. Venture capital investment is usually divided into several stages, including seed stage, initial funding to develop a business idea or prototype. This stage often involves small investments to get the company off the ground. Early stage, funding to help the company launch its products or services and begin generating revenue. This stage focuses on scaling operations and building a customer base. Growth stage, larger investments to expand the company's market reach, increase production capacity, or enter new markets. The company is expected to have a proven business model and significant growth potential. Late stage, funding provided to mature companies that are preparing for an initial public offering, IPO, or acquisition. The focus is on optimizing operations and maximizing value. 4. Benefits of venture capital. Venture capital offers several benefits to startups, including access to capital, provides the necessary funds for growth and development. Expertise and mentorship, investors often bring valuable experience, industry knowledge, and strategic advice. Networking opportunities, venture capitalists can connect startups with a network of contacts, potential partners, and customers. Validation and credibility, securing venture capital can enhance a company's credibility and attract further investment. 5. Risks and considerations. While venture capital can be incredibly beneficial, it also comes with risks and considerations. Equity dilution, founders give up a portion of ownership in exchange for funding. Control and influence, venture capitalists may seek a say in company decisions or strategic direction. High expectations, investors expect significant returns on their investment, which can create pressure for rapid growth. Conclusion. Venture capital plays a crucial role in the startup ecosystem, providing the funding and support needed for businesses to grow and succeed. By understanding how it works and the potential benefits and risks, you can better navigate the path to securing venture capital for your own venture. If you found this video informative, give it a thumbs up and subscribe for more insights into the world of business and finance. Thanks for watching, and see you next time.